Hello, welcome to the live stream. This is ruralclassroom.com. I'm Albert Liu, and you are on the natural resource community founded by myself and Rick Rule. Today, our guest is Brien Lundin, president of Jefferson Financial and host of the New Orleans Investment Conference. Brien, welcome. Good to have you back. How are you doing?
I'm doing great, Albert. Wonderfully. In fact, how can you not be in these markets, right?
Markets are good, Brien. It's just hard to keep, stay calm when things are just going so crazy. So let's just get your thoughts, just in general, since the last time I spoke with you. Maybe that was several weeks to a month ago.
Yeah.
What's changed? What's been going on?
Well, same direction, only further. For the metals and the miners, the stocks have really kicked into high gear and have been leveraging the moves in the metals, which have just been relentless. And it's an interesting market that we've chosen to focus on here, and that in a bear market, it's stressful because you're trying to pay the bills, your back's against the wall, you got a gun up against your head, and you're trying to make a living in this sector. And then in a bull market, you stress over what to do and whether to sell. It just seems like there's always an excuse to stress out this market. But this is, this is fun. This is great. We've been through this before. Maybe not with the kind of upward violence that we're seeing in recent weeks. And the question of the day is, what do we do now? What do we sell? Do we take profits? And that is the big question that I see a lot of people having right now. The big point of concern.
Sure, and I want to address that in a minute, Brien. But before we get there, stocks took a really big turn. There was kind of an inflection point in August sometime. I mean, we had a good year already.
Mm-hmm.
But it seems like things really got into high gear. Is there any particular factor, development, news, announcement, or geopolitical factor that accounts for just this inflection point in August?
I have not been able to pin anything down, but it literally came right at August 1st. If you look at the GDX to gold ratio, you can see that ratio took a turn on August 1st like it was shot out of a cannon. And the miners started to outperform gold. And gold had already started to move a bit. But gold's real bottom, or the real instance where the starting gun for gold taking off, came on August 22nd with Jerome Powell's speech at Jackson Hole. And that was essentially announcing a new easing cycle, rate cut cycle. And that's when gold started to take off. And then the miners then leveraged gold. They outperformed gold still, considering the move that gold has made or started to make at that point. The fact that the miners were still able to outperform gold is extremely impressive to me. And they did. But other than that, maybe it was investors trying to get a jump on what they perceived would be the turnaround. It was widely suspected that the September Fed meeting would bring the first rate cut. And so maybe it was a way to leverage that move and get in early. But it's a small sector, so it doesn't take a whole lot of money relative to all of the other sectors out there to get allocated to the miners to really get it moving. Yeah, I don't know what fired the starting gun, but that's about when it started.
Yeah, perhaps it was anticipation of the rate cut. I've long thought and said that at some point, and I never claimed to know when that would be, but at some point, future rate cuts would not have the desired or anticipated outcome on the broader market, and would have sort of a turbocharged effect on gold and gold stocks. We could be there. Do you think that's what we're seeing here?
Yeah, I think it could be. I think Fed policy has become the or the market has returned to an obsession with Fed policy. We've got it's been that way for years and years, and it really kicked in post the great financial crisis of 2008, where everybody was just looking at Fed policy. Economic data was not used as an indication of where the economy was going, but how it might influence Fed policy. And the degree that the monetary spigot was opened or shut was all that the markets were worried about. And as a result, all of these asset classes that might have one time been contracyclical were simultaneously buoyed up on an ocean of liquidity, or the anticipation of liquidity, and all the correlations started to trend toward one. That means commodities, monetary metals, stocks, bonds, everything. So we're in that period again, post summer, where we're looking toward an easing cycle, and the stock market has responded in kind. I've never been a believer, because of this focus that the markets have on Fed policy. I've never been a believer that we needed a correction or a crash or a bear market in equities, broader market equities, to send the metals higher. And I think that's been proven out. Now, if we get to a point where equities falter and they go in a bear market or a significant decline, and we don't have the kind of liquidity event that knocks the legs out from the metals and the miners, then I think we could really get things supercharged to the upside. But I don't think it's necessary. I don't think it's a prerequisite for a metals and mining bull market that we have a corresponding bear market in the broader equity market.
Right. Now the rate cut itself was small, I guess, compared to maybe some people's expectations. Maybe the biggest thing to come out of this is that Trump won the battle with Jerome Powell. Is that, do you see it that way at all?
Well, it was a battle that Jerome Powell was always going to lose if you looked at it that way, because economic data, primarily the jobs data, continue to point toward an easing, at least from the Fed's point of view. Certainly the inflation data hasn't, but they had to choose one or the other, and they are going to choose the economy and the labor market. So they were going to cut rates anyway. It's just ironic that the political pressure on the Fed only served to delay rather than accelerate the rate cuts. But now the board really, I think, recognizes from their data that they need to cut rates, and that there will be another one and perhaps two rate cuts this year. But what the market is really looking at, I think, is that we're going to get 1, 2, or 3 rate cuts out of the Powell Fed. But come next May, there will be the Trump man in that seat, or woman, and whoever that is, well, you can be sure they're going to be cutting rates like mad. So that, I think, is what the market is really looking at and starting to discount right now.
Yeah, and that's going to be very bad for the U.S. dollar, wouldn't you say? I mean, we've already taken a bit of a beating here. Something like that would not bode well.
Yeah, it wouldn't necessarily bode well. I think that's what's been weighing on the dollar. But my view on the dollar, at least in the dollar index, is who cares? It's looked upon as one of the primary factors driving the price of gold, and I really disagree with that. It is, the same factors, or the real factors driving gold higher and the dollar lower, are acting simultaneously on both. And really, that's rate policy. That's the bottom line value or purchasing power of the dollar, and bigger factors. And I think they are both victims or both being catalyzed by the same factors. And if you look over the long sweep of history, the correlation between the dollar index rather, in gold, it looks like an EKG. It's up and down, all over the place. It is broadly an inverse relationship, but there are long periods and short periods throughout the time where they are positively correlated, actually. So I don't look at the dollar index as anything but a view on the dollar's value vis-a-vis the other fiat currencies, which are all headed to the bottom of the hill anyway in relation to gold.
Yeah. But if you're like Rick, and I kind of agree with this, is that you save in gold, but the dollar is your liquidity. And even if you only hold the dollar for liquidity, it's a little disconcerting to see it fall as much as it has, right?
Yeah, but of course, Rick will soon, with the aid of his teams at his friends at Battle Bank, will allow you to have your liquidity in virtually any currency you like. So there's that. So Rick has recognized an issue and he's correcting it too.
Yeah, Rick
For
is
all of
amazing.
us.
I wasn't intending to slip in a Battle Bank commercial. Somehow he made it happen.
I'm a shareholder and totally behind it, so I will do the promotion for you. There you go.
Okay, all right. Let's talk about these stocks then, Brien. Rick got people a little bit excited when he came out and said that he'd been an aggressive seller of some of his mining stocks that he'd held for quite a long time. And he just said that the move was very quick. And when that happens, and some of these names maybe price in a little bit too much good news before it's happened, it's time to take some off the table. So he was very transparent about that. People in the classroom really appreciated that. And he reiterated that comment in the boot camp we had on October 4th. And, he wasn't the only one. Lobo Tigre also spoke and said it's kind of similar, had similar feelings. So what are your thoughts on what is the and one thing that was very useful that came out of that boot camp was Rick said, look, bull markets are fun. We've all experienced the opposite, so we all agree with that. But he also said bull markets are much more dangerous. So what are your thoughts on how you deal with the market we're in now?
Yeah, it's easier to fall than it is to rise. I mean, there's gravity in these sectors as well. Personally, I'm looking forward to the mining share panel at this year's New Orleans conference that Rick moderates, when I can turn the tables on him and ask him which of his fully paid exhibitors is he selling right now. I'm sure he'll appreciate that. But Rick's the smartest guy in the market. He's early, habitually early getting into a sector, and I think he'll say he's also early getting out, which is better than being late, of course. I think it is nerve-wracking in a way when you have the kinds of paper gains that we have. Most of us have in the sector right now. And I think that taking profits in a sector like this is never a bad idea. Gains are not bad. Realized gains are the best. And you need to take profits along the way, but you also need to recognize a few things about yourself. One is that very few of us, and most likely anyone listening or watching this, will have the ability to sell a favored junior mining stock with the idea of buying back in at a lower level and actually fulfilling that strategy. In the vast majority of cases, it will not happen, and probably shouldn't happen. When you sell big winners in the sector, and this is something that I learned in the bull market of the early 2000s, when the market hands you really big capital gains, you have to look at it almost as an income stream that you need to dip a ladle in and take out of the market, not just into cash in your brokerage account, but completely out of the market and in something somewhat illiquid, maybe gold bullion, maybe real estate, but something that will force you to take a couple of steps before you plow it right back into the next story. And of course, along with that, there are gains that you will want to leave cash in your account so that you can act quickly when new opportunities come. But our big hope here is that this is a market that will go on for years, like we saw in the 2000s. And there are companies, probably most of the companies that viewers right now and that I hold and many investors hold, they're going to be worth a whole lot more in the years to come because they remain undervalued in light of the current metals prices, despite the fact that they've doubled or tripled in price or more. The moves that we've seen are more a factor, although the market is definitely overbought, et cetera, et cetera. The moves we have seen are more a factor of how bombed out the market was beforehand. Companies with big gold resources that are now selling for $40 an ounce in the ground. Well, when they were selling for $10 an ounce in the ground, that was excessively undervalued. $40 an ounce in the ground is still very significantly undervalued. So those kinds of companies are going to be selling for a lot more down the road, even if they take a 20 or 30% haircut in the near term. They're still going to be selling for a lot more at some point.
Yeah, I had a guest on in the classroom recently said, look, we were at 20% of NAV, now we're 30% of NAV. So I think Rick holds that view as well. And to be clear, he didn't close positions necessarily. He trimmed positions. So he recovered his basis, is what he said. And then a lot of the proceeds went back into the sector, but into the highest quality names. So that's what he's doing.
Yeah, and when I say that hardly anyone can sell and buy later at a lower price, Rick's one of the few people that can do that and can actually accomplish that strategy.
Yeah. Plus, he said he was very early. He enjoyed probably more gains than most of us have. So that's excellent. So since you mentioned the conference, Brien, let's talk about what's going on, because we have the annual New Orleans Investment Conference coming up in November. See a lot of familiar faces there, including Rick, Danielle DiMartino, Peter, and Brent Johnson. I don't think Margaret Thatcher is going to be there, but a lot of good people are going to be there. So let's talk about what's going on. Why should people join us?
Yeah, Albert, the last year we tried to really just blow the doors off of value and get our best speaker roster ever, and I think we did. But I think we've taken it even to a higher level, set the bar even higher this year. There are a couple of people that I would have liked to have had that I wasn't able to get because of conflicts, but other than that, I think I've got just about everybody. Now there's only so much room and so many days, but for 4 days, we're going to see nearly 50 of the top minds in the market today, from macroeconomics, geopolitics, every asset class, every market, and as usual, a big focus on metals and mining. And I urge people to look at our speaker roster. Go to the website and look at it. It goes on and on and on, and you're not going to find, I think, anything like this anywhere else. And it's always a huge value, but this time, this timing in this kind of a market, it is a can't miss event. You will cheat yourself if you don't attend the New Orleans conference in this kind of a metals and mining bull market. And it's not just about the profits you can make, but it's also about the profits you can protect. We're going to have the best experts out there, including Rick, to give sage advice on how to not only make the money in this market, but keep it.
All right. I've got a link for you guys if you're interested in joining us. It's going to be noic.ruleclassroom.com. We're already making the reservations, Brien, with all the friends for dinner and whatnot. It's always a fun time. You invite great speakers, and it's just one of those conferences that everyone I know wants to go to. Even those of us who have our own show,
Yeah.
really make it a priority to make it out there and just meet all our friends again, and then also learn a lot from people that bring just a wealth of knowledge to the room. So please, if you're interested, I talked to a lot of people, Brien, and I was once one of them, who have been thinking about going to this conference for a long time,
Hmm.
but just never had the opportunity. So this is a great time because the way the market is going, I think the timing is good. You'll be able to put the knowledge, the lessons to work right away, um, to make great decisions and avoid very poor ones.
Yeah, and I don't think the timing has ever been better in the 5 decades plus now of this event. But you mentioned other conferences, and I go to all the other conferences as well because this is a a unique market. This junior mining share market, it is inefficient, and you can find values, you can find opportunities that the market temporarily overlooks. And the way to do that is to go to these events, go to Rick's conference, go to my conference, go to the other high quality events, subscribe to the best newsletters and the best services like Rural Classroom, and do your homework. And you can find these values that the market just overlooks because it is so inefficient. And you can do the homework and realize the benefits of that.
Okay, I think I saw some new faces this year, Brien. Who's coming that's new to the community?
Good question. Yes, I was able to get some new people. I got as I'm looking at the list. Peter St. Ange is very popular on social media, economic social media, and diehard libertarian with a big following. Viva Free is our Canadian friends will recognize him. He is a staunch and very outspoken advocate for free markets, free minds, personal liberty, uh, free speech. That and it's especially during some of the events that we've seen in Canada in recent years, he's going to be extremely valuable in explaining some of that. Jordan Roy Byrne is back. He hasn't been to the conference in a few years. He does remarkable work. I think he's the best technical analyst right now in the junior mining sector. Dan Oliver is somebody that I've been a big fan of for a number of years, and have finally been able to get him to come. I think he's going to be one of the big, I don't want to say surprises, but I don't know that as many people know about him, but he is equal to anyone in his insights and eloquence in explaining the macro factors that are driving the metals higher. So I'm very excited about him. Carrie Stevenson is new to the conference this year as an MC. I know she's does some great work at Rick's Symposium. So we have stolen her temporarily for our event. I think that's the only
Yeah.
absolutely new people.
Mike Maloney's going to be there. I don't think he's
Oh
new.
yeah, Mike Maloney. Yeah, read right over him. It's his first appearance this year, and he's got a tremendous following. Great guy. I've gotten to know him over the past year a good bit, and very excited to have him. Does the best job of anyone, I think, of explaining the role of gold as money and the history of money, which is, of course, the history of gold as well. So very excited to have Mike as well. And there's some people that are every other year, every few years, like Matt Taibbi. I think he's the most important journalist of the past couple of generations, really, out there. And Robert Kiyosaki has a tremendous following. He's back this year. after an absence of a few years. So,
Okay, great.
yeah, it's a great lineup.
It's going to be fun. Okay, so there's the link. So I want to get to some questions for Brien. So please feel free to post them in the comments if you have questions. We've got one leading off from Tom. Let's see. Can Brien comment on Newmont's new CEO designate? Given her longtime experience leading Anglo American Platinum, does this suggest Newmont's strategic focus to expand operations in Africa?
I have to say, I'm not up on that, on her qualifications. I don't feel qualified to talk about that. It was interesting to me that, although in Newmont was a bit different with the announcement of a retirement upcoming, but that Newmont and Barrick both lost their, or had those management changes at the top of the C-suite on the same day. So that was interesting to me, and I'm hopeful that it will usher in. I think in the case of Barrick, it will usher in more M&A, more aggressive M&A. I was actually a big fan of Bristow, so that was interesting to me from that standpoint. Newmont, I think, is still, from what I've heard and the discussions I've had, are still very busily trying to digest Newcrest's assets and get a handle on what they're going to do with those assets. I think there'll be some more divestiture coming out of that, and maybe this will help accelerate that. I don't think they're going to be as aggressive on the M&A front for a while because of that, but I think we may see some projects drop out of that, which could create opportunities for juniors and mid-tier companies.
Okay, from Dominic Brien, can you please share your thoughts on Marin Energy, aka Africa Oil?
No, I can't. I haven't followed it for many years. I think I may still be a shareholder somewhere, somehow, in an account somewhere, but it used to be many years ago. But no, I'm not up on that one.
Brien, when is the right time to start looking for places to rotate some of these profits? There's got to be the next opportunity, and we should be setting ourselves up for, be it energy or something else. Are you looking in that direction now?
Yeah, always looking at that. To me, I look at some of the profits that this market is handing over, and trying to take them off the table first. I think that energy is the next big thing. It's fairly popular as the next destination from among the contrarians among us, which is basically everyone we talk to, right? Everybody's talking about finding those opportunities. I know Rick is, and I'm looking forward to Rick actually sharing some specific ideas after he has established his positions and those ideas, but sharing some ideas there, because frankly, he's one of those experts I would look to for opportunities in that sector. Within the metals in mining sector itself, there's some rotation that's I think important to consider, and there is an evolution of the sector. I think that because of the rise in the metals prices, the companies that have really large resources in the ground have yet to be fully re-rated, and I think that's a longer-term process. That's one area I think we can find some values still.
So, Brien, what would it take for that to happen? What's the
M&A? Two ways I see M&A from the majors or even the mid tiers. I think we'll see. There's not as many majors as there was in the last cycle, but I think we'll see some mid tiers become majors in this cycle. But the M&A activity is one, but also the influx of money from outside the sector. You look at the way money is thrown around in these larger sectors. The numbers that seem immense for us, $500 billion in capex to build a mine, $1 billion or more for something like, some other, big major projects. And this is the kind of money. These are the kinds of capital, level of capital that is thrown around in these other sectors, like pennies on the ground. I think that we will see some big money come in and say, we want to buy a commanding position in this sector, get all the resources in the ground, and we're going to write a check for this level to secure that. If you look at area plays like the Tudagon in BC, $1 billion investment by some hedge fund could buy every company in that sector. The whole area play, just take it off the table and say, we know we're going to find millions and millions of ounces of gold and hundreds of millions of tons of copper, and look at it as strategic investment. So that's the kind of money that's going to come to into the sector. And I think investments like Tether's $100 million investment in the EMX Elemental merger, I think that was the camel's nose under the tent for more of that kind of money. I think Tether Gold's ongoing purchases of gold bullion is, a sign of a lot of what's going on, undercover in this market, below the surface. I think there's a lot of allocation going on like that we don't have a handle on, and what we're seeing is just the tip of the iceberg.
That's so true. Among the players could be, like you said, issuers of stable coins and maybe the U.S. government as well, Brien.
Yeah, that's a point I've been making. This latest surge in the gold price has had me wondering if the central bank we're not accounting for is the Fed or the U.S. Treasury. And I posted a meme about that actually on X, with someone whispering into Donald Trump's ear, we can't audit Fort Knox until we put the gold back in it. And, it's interesting to me. I had Grok plot the mentions of an audit of Fort Knox, and they peaked in February of this year, and that's right when the gold price started to take off, or right afterwards the gold price started to take off. After all this talk of an audit of Fort Knox and the administration died off, the gold price took off. I mean, is that a coincidence? Maybe not. But there's a big buyer out there, and I don't think it's just China. I think there's something else going on.
Interesting. Okay, let's see. Question from B. Brien, any thoughts on Independence Gold and Silver?
I haven't followed that for a while, but I really liked the story. I had kicked myself because I missed it, and I saw that it was a value. But it's such a target-rich environment, you can't cover them all. I don't know the story of No Promised MRE, but the project itself, the projects themselves, I really liked a while back when I looked at them. But I'm sorry that I'm not up on the resource estimate that was promised.
That's okay. Here's a question I've been waiting for from Tom, anticipating this. With gold, silver, and other metals hitting their highs, do you feel a pivot to oil is valid given its relative underperformance?
Yeah, this is a unique metals and mining bull market, and that the biggest cost input for miners, being energy, is relatively dormant and suppressed. And so low energy costs, they don't need it with prices rising as high, but it just exacerbates the margin expansion that we've been seeing. But I would caution that you have to look for other factors at play. Just the fact that something is relatively undervalued or has yet to move in relation to another asset does not mean that it will actually do so. So I think you need to look for, production plateauing, underinvestment, all the typical factors, and something else that's going to prompt rising energy prices. I am not an energy analyst, but I am attracted to the sector on a relative basis. But I think we still need to find some of the other factors that might drive prices.
Okay. Here's another question from B. It says large resources are financing again with 5-year full warrants. Are they in danger of bankruptcy? Why are they doing this, Brien?
Well, probably because Rick Rule is demanding it. Usually, the way those 5-year warrants happen is Rick drives a hard bargain. You want to be on his side of the table, not on the other side of it. I have not seen that, though. I have not seen that as being a widespread factor. In fact, I've seen more companies doing placements without warrants or half warrants. I think they are largely naming their own tune, or naming their own price, singing their own tune. If a company in this environment is issuing a 5-year warrant, that's either to get in a very smart strategic investor that is demanding that, or I think I would judge that as a sign of weakness, because it is a seller's market as far as financings go.
Yeah, yeah. And Joe Mazumdar corroborated that, and I think you did too after the Beaver Creek conference. There seemed to be ample funds being raised.
Yeah.
Jacob's following up on Barrick. Do you have any further comments? I know we already discussed it tangentially to the Newmont change of management, but he wants to know what the upside is with the new gold price and
For
chances
Barrick?
of M&A.
Yeah, lots of upside. I think Barrick's going to get much more aggressive now. Bristow was a really smart guy. He was a gold bug, or at least he used to be a gold bug in the old days, in the early 90s. We helped him build Rand Gold. It was a South African and African-based gold play. And he was renowned for going where others feared to tread. In old Africa hands, so wasn't intimidated about Africa. Perhaps Pakistan was a bridge too far for most other mining executives. It wasn't for him. What was curious to me in recent years was his focus on big copper as much as big gold, which, for a gold bug like he at least used to be, I found that interesting. The other thing about Bristow was that for many years he focused on projects with low gold production costs. Didn't want anything over $1,000 an ounce as far as OPEX for gold. I think he let that fall by the wayside eventually, but he focused on projects that could work in almost any gold price environment. And I don't know that the current board of Barrick appreciated that level of restraint and wanted to be more aggressive. And I think even though Barrick recently caught up with its major brethren in the gold mining industry as far as share price performance, it did lag for a long while. And that probably almost undoubtedly created some tensions on the board that didn't go away even as Barrick caught up. So I think they're probably going to be more aggressive. The way that I would play that is not necessarily Barrick itself, but what is Barrick going to do as far as consolidating area plays, looking for new projects, doing M&A. That's probably the best way to play that. And, I don't know, I don't have any specific names, but I think buying or investing in good juniors with good projects will benefit as Barrick and the rest of the sector gets a little more aggressive on the mergers and acquisitions front.
Okay. someone here wants you to put on or look into your crystal ball, Brien. Do you
Great.
expect correction in gold and silver in the next few weeks? I would add, do you worry about short-term corrections in gold and silver when managing your portfolio?
I really don't worry about anything anymore unless somebody's shooting at me. I'll try to reach that state of contentment, but I do have concern about these things. Gold is a different animal now, being driven by central bank buying and not the ebbs and flows of investor emotions. So I think the central bank buying and the buying by whatever central banks we're not aware of is strategic. They and largely price insensitive. Probably a form of dollar cost averaging of much larger numbers than we employ in our portfolios. So I don't know that we're going to see a correction in gold. The short history of this gold bull market, 18 months or so that we've seen, has been punctuated by corrections that have not been to the duration or degree that technical analysis would have predicted. And in fact, if you look at these thrusts, I think we've had 4 or 5 dramatic upward thrusts in the gold price and 3 or 4 sideways trading actions where we did not get a significant correction, but gold just traded sideways for a few months, and then we had another big rally. We're in the midst of one of those rallies right now, but I don't think we're going to see the correction. And in fact, if the price trades sideways for some period of time, it can work off that overbought nature. But and so I don't think we're going to see that as much. Now, silver and mining stocks are different. Those are still driven by investor emotions, individual investor and institutional decisions. And I think that's where I see the potential for significant corrections. It will be harder to get significant corrections if the gold price remains fairly buoyant, but that's the place where I would see and frankly expect some sort of a correction in the near to medium term.
Yeah, Brien, I know this is going to sound like this time it's different, but it's hard to imagine a major correction in gold without some big players seeing that as an opportunity to further their accumulation. It just seems like that's a priority for too many people right now, and big people, like you said.
Yeah, and when we have seen some short attacks, bear attacks on the gold price, we've seen them get steamrolled by buying. I think that a lot of the actors that used to take advantage of that have gotten out of the way. We even saw it a day or two ago in silver, and overnight markets. There was some huge amount of contracts, so I forget the actual amount, that were dumped on the market in very thin trading, and it did drive the price down, and it just popped right back up. So it maybe not central banks, but there are, I think, some strategic buyers in silver as well.
Okay. If you have any questions for Brien anymore, send them in. We are sort of coming toward the end, Brien. I just want to open it up to you. What have you been writing about lately in Gold Newsletter?
Well, I have been trying to address the thought of when to take profits, and that's difficult because everybody's different. We are at least I'm not a registered investment advisor, so I can't give individualized investment advice, and wouldn't want to try, frankly. So you need to sell whatever allows you to sleep well at night. And as Rick says, the point of no concern, to where you at least mitigate those worries that you may have about losing what you've already gained on paper. So I'm talking about that a good bit. I'm talking about some new exploration plays that I found, some values that I've found that I think the market has been overlooking to some degree. But as one of the sectors I think that bears watching thematically is exploration, because of what we said earlier. It's easy for companies to raise money, at least quality companies to raise money right now, and just about every company with a decent project or projects is cashed up, and the drills are turning. And they're turning this summer. We're getting results from a lot of projects now, and they're going to be turning next year. Now, we're going into the fall. We're not going to have much of a tax loss season this year, but I think people over the next few months should look at that lull in news after we get all of the results in from the summer's exploration programs. Then we get into December, January, February. I think that's a great time to pick up values and be a bit more aggressive. So, like I said, it's hard for you to sell a favorite junior mining company today and then buy it at a lower price. But if you take profits and are able to take profits right now, you may be able to find some really good values on the exploration side, especially this winter. And building up some cash for that would not be a bad strategy in my mind.
All right. So that's goldnewsletter.com if you want to learn about Brien's newsletter. We do have questions coming in, Brien, so let's keep going.
Okay.
Few minutes we have left. James says, don't hear much about Alamos or Goldfields on these shows. Brien, any thoughts?
Yeah, because you don't hear much about gold producers really on many podcasts or newsletters, etc., because it's people want to hear typically about the more exciting, more speculative plays. It's been interesting to me that in this bull market, some of the bigger returns have been from the mid-tier and smaller producers. And so there's been a bit more focus on those than I've seen in past cycles. But yeah, if you're looking, if you're going on podcasts and streams like this, you typically hear a lot more about the high risk, high reward, high potential exploration plays more than the somewhat more boring producers.
Okay, let's see. From Michael, do you think platinum will get back to its historic price ratio to gold?
No, I don't. I think platinum had some monetary cachet, palladium as well. In the old days, it's a precious metal, but it never really had a monetary use. A little bit in Switzerland, but not much. So it's never really been a monetary metal, even though it was lumped in with gold and silver years ago. But it is an industrial metal. It is a specialty metal, critical metal in a lot of uses, and it has its own story. It has its own bullish story and bullish on platinum. And it has much to do with supply constraints and supply risk as it does on the demands from the demand standpoint. So yeah, I like platinum. I don't think it's going to exceed gold again. Never say never, but I find it very unlikely that it will, because I think the monetary factors driving gold are so extraordinary right now. And in fact, gold is playing catch up for years of price suppression right now. So, good luck to platinum. I don't think it's going to exceed the price of gold anytime in the near future. And I hope that it doesn't, because that's probably going to mean that the gold price has dropped. And I don't think that's going to happen.
Yeah, I don't recall reading anything really about the monetary history of platinum. You read about silver and gold, obviously, and the
Yeah.
U.S. Mint does mint platinum coins, but that's about it. I don't really know much about the monetary history of that metal. Is there one?
Not really. Not really. I believe that there was a some history of the Swiss thaler, Thaler, which was a forerunner of the dollar, or the Swiss pronunciation or German pronunciation of the dollar. But I'm not. My memory fails me. I don't. I have a feeling that platinum was involved at some point,
Okay.
but not sure.
Yeah, I always thought it was silver. Okay. Let's go to the last question here, and it's a great question from David. Any thoughts on whether we are in the early or late stage of any run up in rare earths, miners and processors, Brian? This is all over the news right now.
Yeah, it is. It is, and the big names have risen already and have had some extraordinary moves. I think we're still in the early stages because that market is yet to expand like and spread like the rare earth mania that we saw in what was that, like 2007 or thereabouts. Um, so we're not seeing these things pop up like mushrooms after a rainstorm yet. So from the junior standpoint, it's early. From the major standpoint, I think it's taken on a bit of a fad, a momentum play that's probably going to stumble. But in these sectors, we don't see stumbles that last. I mean, the cycles come more quickly. If you look at lithium, we had bull markets, bear markets, bull markets, bear markets in quick succession over the last decade or so. So yeah, we're going to have corrections along that trend, and I think we're due for one. But the pricing of rare earths is so opaque that you can't not have severe price disruptions like you can in widely traded, more liquid markets. So the corrections will be more in the equities rather than the products themselves. So yeah, I think we're about to see a bunch of new juniors rise that are going to be rare earth juniors and reprocessing or repackaging old projects. But it's in this kind of a gold bull market, there's not going to be the incentive to do that as there was in the past rare earth boom.
Okay. Great timing for that question, though, because later on today at Rural Classroom, we're holding an exclusive event with Dr. Andrew Tunks from Meteoric. He's going to be joined by Andy Thompson and Nomi Prinz. So if you are interested in rare earths, I encourage you to go to ruralclassroom.com, register. It's free to do so. And you can take part in this exclusive live stream. It's going to be 5:30 today Pacific time. So join us if this is something that is of interest to you. Okay, Brian, let's end off with this last question. And Adam is asking about your service. So he's asking about what is the difference between Gold Newsletter and Gold Newsletter Alert?
Yeah, Gold Newsletter is our monthly newsletter. It is extensive, usually about 30 pages or so in length. I cover the macroeconomic and market outlook for metals, and in a lead article, then have a number of pages, probably covering a dozen or more, maybe as many as 20 junior mining stories. So it is detailed, comprehensive, and monthly. But it is a fast-moving market, and we have a weekly service, which is the alert service, for not much more money, but for a higher price. You get my weekly market commentary, and that includes picks that may come up, in the interim, in the middle of the month. Alert service subscribers also get an advanced look at the monthly issue before everybody else gets it.
All right, great. And both available at goldnewsletter.com?
Both available at goldnewsletter.com.
Okay. All right, Brien, we are coming up on the time, so I want to thank you again for joining me for this last hour. It's always great to have you. People appreciate you taking their questions, and just want to give one more plug for New Orleans. It's going to be a great time. It's one of my favorite times of the year, November 2nd through 5th. Lots of great speakers, and like Rick likes to say, you can have a little bit of fun in New Orleans if you put your mind to it.
You can, but you don't need to put your mind to it, because we like to bring lots of New Orleans into the event. There are people who come, I dare say probably most of our attendees never leave the hotel, and they never have to buy a meal either, because we have breakfasts, lunches, dinners, receptions, entertainment, special events. It's a lot of fun, and we try to bring that ambiance, that special New Orleans experience into the event. And I think we do a pretty good job of it, especially with the food. But yeah, it is going to be an incredible event, especially this year. Registrations are pouring in. The hotel's going to be packed with eager investors willing to share their ideas. Dozens of today's top speakers, and Albert Liu will be there, orchestrating, the ringleader of many of our activities from the podium.
Yeah, love it. Love the panel that I host every year, and this is just going to be great fun. So thank you so much, Brien, again for joining us, and I look forward to seeing you in New Orleans, and then hopefully many of our viewers will be there as well.
Great to be with you as always, Albert. Thank you so much.
All right, take care.